All right, Thursday, April 13, 2017. I'm going to run through futures here real quick. Wednesdays, we had Trump mentioned the Chinese currency again, and we got to bounce off of here. This is the Australian dollar futures. We got to bounce off of it. Basically, I'm looking at the bounce here in the foreign currencies, just as a bear market rally on here. Remember that Friday we have subdued trading for the long holiday weekend. Right now, I was looking for lower interest rates into the home buying season, into at the end of June, which is a seasonal period for interest rates, and then July 1st it changes direction and goes the other way. That's causing the dollar to be pushed down a little bit for right now. We also have soft inventories, sales of autos, and autos in America are 25% of GDP. So we have earnings coming out, beginning to pick up here. So we have that going on. But right now, overall, the stock market looks like it peaked about 7 weeks ago. It's been trending down since, quietly, nothing major, but it looks like European indexes are beginning to roll over too. So we may have a 2-month period here of weakness. I don't think it's an extended, 9 to 18-month bear market. I would welcome something of a decent sized pullback in equities. Usually the popular ETNs and ETFs of indexers are the last to roll over because the money just funnels into a handful compared to the broad-based market. So for right now, I would probably look for the Australian dollar to pull back just a little bit here, and then probably make it maybe a run up to here to 76 for right now. This is just news related, but it was the Australian dollar. These are 2-hour charts. Was oversold, and this was with stochastics and MACD down here, so it was due for bounce. But like I said, I'm looking for a bear market rally. As things clean up over the weekend, I'll post more charts for the following week. This is just kind of, I'm gonna assume subdued, but just remember, equities are kind of having a tough time right now. I would view any strength in the stock market today. I'd write covered calls against it if you're long. Try to pick up some premium here. British pound, just like with the Mexican peso, I think the British pound is going to be one of the better performers for this year. Basically, a lot of sideways going on for right now. I don't think there's much more talk that they can do for the British pound. This is at a 30-year low plus. We are getting choppy sideways action. This is typically like a wave 4, so there may be one more little poke down below here. But if it clears above here, then I'm talking 130, 133 area for the next target. But anytime I hear something's at a 30-year low, I'm interested in it. The red line is an ADX, and an ADX is an indicator that tells you if you're trending or not. This is now a daily chart, so you can see as the British pound rolled over here, the ADX picked up, and the green one is the money flow, the amount of money that's flowing into it, and then you just have some oscillators down here for those who follow stochastics and MACD. But I like any more of accumulation. Remember, this is currency, so you're talking a good 500 point range here right now. So, but I'm looking upper targets of 130 to 133 for right now. The British pound, I believe, doubled after it had a hard sell-off in 1985. It doubled, I think, over that next 5-year period. So we shall see, as they say. Housing's kind of rough going on in England right now. They're at the other end of the extreme again too now. Canadian dollar goes along with oil. Canadian dollar, oil yesterday pressed up against resistance area, and I pointed out over the last week that there's oil can clear 55, 56, then it's about 62, 65, and then 75. There's not much air in oil. So the Canadian dollar here right now, this purple line here is a trailing ATR, trailing stop, and we're basically banged up against that. So usually it holds off before a trend change. For right now, I just it's basically sideways, but from 1985 to 1990, oil came off, but the Canadian dollar went up. So I'm kind of leaning that the Canadian dollar may do the same here, but it is tied to oil for those of you that trade oil. Euro, if the euro goes up, gold goes up, the euro should go up. So the euro is being subdued here. The little purple lines here, like pivots, and I have two of them together. So the euro is actually sitting on an area here. And the euro makes up in most dollar baskets about 60%. So if the euro goes down, the dollar should go up. That kind of thing. But things are kind of mucky right now, and each time zone has their own little play going on. You know, the dollar might be up in Asia, down in Europe, and then up in America, that kind of thing. I don't expect anything newsworthy to come out over the weekend, but a lot of it is saber rattling. But just, keep that in mind here. Where are we at? What, next week is OPEX? So possibility there of buying weekly puts kind of thing for insurance. Not insurance first, speculation second. You can, if you do covered call writing, write the calls and then buy the puts. But right now, the euro here is kind of sitting on a couple of pivots. All right. And then these are support lines down here. All right. Japanese yen, as the Japanese yen goes higher here on the futures, that means the carry trade is unwinding. Carry trade is where there's a discrepancy between two interest rates, arbitrage. This does look like a bear flag, though, so it looks like we may get a stronger dollar here coming up, and the dollar comes down. For this pair, U.S. dollar, JPY. Let's see, set an alarm up here. Come on, you. We are getting, okay, so we are on here. This is a 1 hour chart. So I am getting some divergence here on the MACD where price is going lower and the MACD is holding up. So we are getting some sort of divergence here. What do we have here? 110, and we're at 105 now. So if this pops through, if it goes up about, 15 points or so, there may be another 75 points to the upside here on the US dollar yen. So in the big picture realm, there may be more to the downside on here. This is basically the move up. We have a head and shoulders, 121 down, back up about 3/4 of the way up and rolled back over. So I would welcome any weakness down here. I'd be interested in buying. But like I said, if stocks are going to roll off, this yen part of the carry trade is going to unwind some more. 107.63 here on this trailing SAR, and these little red dots are SAR dots. What I try to do on the charts is try to keep people in as long as possible. Like this moving average, we'll just say kind of held prices in check. So now we're coming down to retest it. But for right now, any weakness, I'd be interested in trailing something behind it and to go long on here. Because eventually the dollar, the Fed's trying to jam the economy into a recession, and that's what we're marching into right now is recession. We did have an extended period after the Great Depression, though, of going 25 years without a recession. Made it into the late 50s before we had a recession. we ran out of interstate. You can only pave so much of America. All right. What do we have? Mexican peso here. Like I said, the British pound and the Mexican peso probably the best bet for 2017. 2017 was somewhat of a difficult year for, wasn't as easy just saying buy commodities like December of 2015 was. So there was enough news with the election and everything here that it just worked out fine. You get in a move like this, and if you do trade the U.S. dollar Mexican, it's a good, if you take the short side of it, U.S. dollar Mexican, what's the interest rate? 4.25. I think that's what I get paid, 4.25 interest. And remember, it doesn't sound like much, but if you're using say 50-to-1 leverage, what is that? 4 times 5, 200% a year. So, and I also get capital gains, and that would be check with your broker. Remember, I'm just an analyst. You're here to learn. Call your broker, read your prospectuses, all that fun stuff. So I don't think that the Mexican peso is going to get back up into here. I think with the Trumpster, there's enough news. This is one of those setups. I've been screaming Mexican. If you look at it for weekly, Mexican peso had actually been, this is just 3 years back. The Mexican peso had been trending for a while weaker, and then the Trumpster comes in and it just rolls over. So this is the median or the point of control area on a weekly. So the Mexican peso is basically sitting here. So if there is a bounce here for this, I'd look for areas to short and possibility of weekly here, head and shoulders, that kind of thing. New Zealand dollar, same with the Aussie, a pullback. Typically when these things bounce, it's commodity related. I'm not sure how the saber rattling is going to play out with all of this, but like I said, I just think of this as just a fair market rally. Eventually you could, before this took off, the New Zealand dollar, I believe it was around 35 before it took off for the secular commodity cycle of 2000s there, like the aughts. So this one still could have what is that, 70 and 3,500 pips lower. That would mean a pretty decent, strong dollar here. Everything goes in cycles. What we're doing now is once the stock markets roll over here, people will pile their money into homes. Here's Swiss franc. Swissy's fallen on pivots here. Moving average retest. Any strength in the Swiss franc, look for short. That's how I kind of look at it here. It's because of the commodity cycle, a lot of funds were set up in Switzerland. So the Swiss franc was like 11 standard deviations off the norm. So there's still a lot of ways to go on the downside for the Swiss franc for right now. So if it moves up to, what's this, 10 something change here, if one more swing higher here, I'd look to be on the short side of things. Brent crude, these are 2-hour charts. This looks like it's making a bear flag here. What did I write there? Short 56. Okay, so this was, what did we have? Today's Thursday, so we had EIA yesterday, and Tuesday we had API, and then IEA, holy buckets, came out and said that they're cheating. Who would have thunk game theory that folks would cheat? But I'd lean right now on the short side of oil. My only caveat, like I said, is there's nothing but air above. I can show that to you real quick here. These are going into, I call them orbs. They call them monkey bars. And what it is it's just kind of a market profile. And these are dailies here. Okay. So this is all the trading during the day. Shaded areas, happy places. Go to a daily, show you a difference here. So here's the daily. So this is all of trading for 17 and trading for 16. But when you go to a weekly, this is Brent crude. You can see that here's where we were at. Currently, we're trading above the happy place, the belly of the bell curve, trading higher off of that. Uh, Once it clears, and Brent is I think $2. It's different between America, so clears up in here. There's not much. You can see all of a sudden here's what 60. What's that? $8 higher. There's not much. This actually shows up better with our regular crude oil. Okay, so here's 2016, 2015. So you can see this is the collapse from $100 down. Okay, and there's not a lot of trading going on here, but you can see that there's pretty much been kind of a cap up in here around 55. But back in the 50s, a few ships in the Suez Canal went and plugged it up and blah, blah, blah. We play our games and they play theirs. So we do have more pipeline. If something like in the Suez, however you Gulf of Tonkin Bay, however you work this thing out, we play our games, they play theirs. So, but here's another one. Even though we have an Exxon guy in the White House, you can also have espionage capital markets. I mean, $20 oil will really monkey up Russia. You can already see it with the Saudis coming to market. And I think they just scored $9 billion, and I think they have $60 billion in a deficit that they're going to have to deal with. So it works for them for higher oil, but if we shoot down to $20 a barrel, then we're talking it's going to cause Putin to have some problems too. Now remember that Exxon still makes its 6 cents a gallon, right? So they make more money with lower oil kind of thing because there's more consumption. I guess the United States is going to add 50% to its population into 2040, 2050, but we'll actually use less fuel. Go Tesla. But you can see that we're basically kind of stuck in a pattern right now in oil. But you start getting over 56 here. There's like I said, there's 58. This one I think is 63, and then next the shaded area is 70% of trading, and this is 76. So if we do get some sort of mucky muck, there's nothing here, so you're going to have a mad scramble. I haven't checked the recent commitment of traders yet, but it was frothy before the recent drop to upper 40s. Okay. So on crude oil here, same type of deal here too. Short. What do we have? Minus 53, 15. All right, short on the oil here, and then depending upon how far it comes down, I guess play it by the odds down here, maybe a couple dollars lower here. A couple of pivots here for the day, 52. So what is it, about 80 cents? So we're back to the world famous 60, 80 cent a day play in oil, possibly head and shoulders here. But like I said, you can start getting above the upper end here. There'd be a lot of chasing going on. So tight stop, as they say. ES, okay, so bulls needed to hold this. Here is, what is that, Tuesday's action, right? No, Wednesday's action. How about Tuesday's action? Tuesday's action, today's Thursday, Kev. Tuesday's action, and then Wednesday's action. We traded below the little Trumpster missile move here. Where are we at? This is the missile move here. So we traded below that. We traded below it again. So the bulls it's not looking so good for the bulls in the stock market, because as you can see, this is getting to be kind of just a bit long in my book to try to keep it together for a bear market, or a bull flag, excuse me. So remember that there's a lot of air underneath this thing, the stock market, from the Trumpster move. You can see here, like on a weekly, we're breaking, we're kind of losing this here. I'll give them a little bit more this morning, see how they can pull it out for close. Remember, with a long holiday weekend, the next stopping point would probably be, what do we have? About 100 lower here. So before you know it, we're 100 lower in the S&Ps. You know, I think we're what, about 2,400 to what, we're 70 points off right now, and no one's. I don't hear much talk about breaking below here. So we're, you know, this is the high. The day after Trump gave his speech was the high. The market's been going down 1, 2, 3, 4, 5, 6 weeks here. So defensive on that one. Now, crossover, remember these are weekly here, so crossover and stochastics, and crossover on MACD. But like I said, I'll, you know, if this does roll over, I'll give it 2 months for a target here. One little thing, since I mentioned the Great Depression versus our Great Recession, we actually ended up having to drop rates in 1937, and stocks fell about 50% in 4 months. So just one thing to think of here. Here's gold, okay, with the link to the charts this morning. I think it's 1335 is the upper end on gold here. Gold will be banging up against some areas up in here. We have the round number of 1300 and stuff. My ABC pattern on a weekly points to $1,513. I'll lean that way. Gold did go up between 1985 and 1987 with stocks. A lot. Oil went down to $8 a barrel, and gold went up. So, you know, each market its own. Try not to have to parlay too many things on here, but I'm going to say that gold may run into a problem this morning around 94.2. It looks like 1294.2. I think seasonally here, this is what is this 2-hour chart? Okay, so MACD is kind of getting there. So once, you know, I have to respect the trend on this here. This is from the low here where I turned bullish on gold with the target of 1,400, came back down. Then the target here is like I said, an ABC wave up to 1,500. But this bar here was the Italian referendum, so we're back into that area. So folks that bought into Italy and held on, they may be wanting to get out here. For right now, I look at gold as a bear market bounce. I personally think we'll see 600 before 1,600, but we shall see. Euro dollars. This is like T-bills in deposits in Europe. We're getting a bounce on here. People are hiding in cash for right now. Nobody's saying the R word, but you know, all of a sudden one day you have soft sales, say the holiday season, then you have soft sales in cars, which should be strong. And then you have goofy weather that causes, you know, people to go shopping on Amazon, but you still have to go to work in that. So we may get a string of events here. The only thing I'm looking for that would cause disruption and somewhat either stagflation, if the economy does kind of falter out, is if we do get a North American drought this year. Also, we'll just say Northern Hemisphere. Goofy stuff. People told me that their apple trees started blooming in February, you know, 80 degrees in February, that kind of thing. So if by chance something happens, we may end up with no crops, we'll say. And that has happened in the past. There have been, think about this one, Monsanto seeds are one and done, you know. You can't, once it comes out of the ground, it is sterile, so you can't plant it again. So there are a lot of reasons why we go to war. So, you know, we've had it pretty good here for a while, but think of what would happen is if, you know, we lost 25% of our crop, you know, you name it, pestilence, whatever, you know, that kind of thing. So here's an ADX on copper. I think we do have earnings coming up. The Trump's rally here is kind of faltering. That's usually how it goes. So the copper is rolling over here, but it is trying to make a stand here. So I'll treat it as sideways for right now. Pretty good, Kev, since markets only go sideways the majority of the time. All right, here's natty gas here. Like I said, I'm looking for either a drought and a hard winter, or hard winter and a drought. That's they usually go hand in hand. Natty gas came off of a 17-year low. We're getting pullback now. Any more weakness on here? Remember my video in January that October natty can go down to, I think it's $2, and the bull trend is still there because the low is 160. So Possibly head and shoulders here in natty gas for right now. But any weakness, I would start buying in, like say March of 2018, that kind of thing. Um, it doesn't mean it can't go below the low in March here. Um, the low that I have in my chart goes back to 1992 at 104. So just putting that in your pipe and smoking it. All right, so this is a possibility of a head and shoulders on netty gas. So 260 would be, there'd be a warning sign. So, but I'll treat it as right now it's just a sideways pattern for right now. Money flows in here. I'll have to look at the traders, but it's a little bit frothy, but not making new highs. So that's just a warning sign here for natty gas people. Here we're gonna bottom in the Nikkei. All right, so we got some Nikkei action here. Japan's largest trading partner is China. The Nikkei has been falling apart, though. If you look, the Nikkei actually peaked back here at 15. So this could be wave 1, wave 2, and this is working on wave 3. Okay, so there's nothing like having Japan run into some problems, right? Especially when the trading partner is China. Just one of those things to watch, they count too, as they say. We're all pretty well globalization. NQ, NASDAQ, so we'll see if the bulls can pull this out this morning. This looks to be around the level of support at 55, and maybe they kind of run it back up here to 80. 58, so maybe 20, 22 higher from here. What is that, 14? So we actually go green. Possibility, I'm not saying it's going to happen. It's the weekend thing. So, and I'll be away today here. I have a thing to do in about 45 minutes. So I will be away from my desk, as they say. So you are on your own. Plus, you're on your own anyway. I am just an analyst. All right. Palladium. All right. Palladium. Okay, so the same thing like with gold, in that they moved higher, gold's moved higher, but palladium here is kind of falling apart. I'll treat it with sideways, but be suspect of anything that breaks through and comes back. Platinum, same type of deal. Be suspect if it breaks out and then can't hold it and comes back in. Because of the gold, same thing, coming into 1300. What's this one? Silver. Silver's running up to something here. 1260 or 1863. The number sounds familiar. 1863 is probably some overhead right now. Came in within 3 cents. So I wouldn't play chicken with this here. Let's take a look at what the daily looks like. And we are breaking out, but we'll see about that. Money flows there. Okay. Same thing again. I'd be interested in buying silver under $8. I'm not. I'll pass. Park my money somewhere else. Bonds, we're reaching a resistance area here. These are ultra bonds, so expecting maybe a pause here. That'd be perfect. Bonds sell off today, and or debt sells off today, and stocks go up. That's probably how I'd lean. Here's VIX, bingo. I think 17 was another resistance area. So grr. So pull back in the VIX. That would be nice, right? I believe, now remember back in 1987, what they had going on there was a lot of people were writing puts. So there's a lot of people selling premium on here. So if they start adding, to try and average in or something in here, all of a sudden it only gets back to like, what do we lose? About 70 to 80 points on the VIX futures here. And then it turns around and all of a sudden we're working on 20. So be cautious if you're a seller of volatility, because you may get into trouble. Everyone piles in 1987. Everybody was short vol, right? Sell puts for profits, or writing puts for profits. I can't remember the name of the book. The people chewed into it, and VIX is at 150. YM, yeah, I'm going to have to lean here that the pros are probably going to buy the open. That's all lean. Of course, I'll be somewhere else during that time period. Yeah, bang out. Looks like, yeah, we do. Looks like we're going to sell off debt and buy equities today. Corn, if you're a producer, do some hedging on here, because like I said, we are going to get a drought or whatever, but if it's not until next year, then we may get a lot of walk. One of those deals, you know how it goes. You get a bumper crop and no price in the following year. You have no crop, you know. You have bumper crop and no price, and they tell you to plow it under, and the next year you're in a drought. Just put it into storage. I don't know, but that's the mathematics and the economics of it. Since the Great Depression, if we have too much of it, bury it. How about just run it through the system? We're printing money. Everybody's getting a piece of the pie. Just make life grand for the planet. But that's not gonna thinking logic. Stop using logic, Kevin. Nobody thinks that way. Bean oil. Yesterday I was kind of bullish on the thing, and we didn't get much of a bounce, but I think it was $300, $600. So what is that? So it was 100 points. What did we get? 20. We barely got anything on here. We got 30 points times 6 was 180. I guess that may have been around the number. Maybe a little bit more on here, but same thing again. I'm looking for sell off and grains and stuff this year. Meal looks like it's leading beans and stuff. I'll just sell some puts. Yeah, here we are banging off on notes. So it does look like we're gonna for right now. It looks like we're gonna do the old sell the debt and buy the equities. So I better hurry up and post this so you can take advantage of it. Looks like beans have already moved. I expect beans to be closer to 850 for November harvest than 1050. How about that? Do some hedging. I've been talking about it, but whatever. Here's twos. Looks like a time to short some twos. It's 2-year notes here. So what do we have? September contracts. This is June. That kind of deal. You want to, on this bounce, you want to go out in that. So what do we have here? So if interest rates come up, so TMB. Let's take a look at that. It's 20-year stock TMB. Ooh, that one's coming down. Well, you guys didn't see that. Well, actually, we need to get in it. You didn't see. Remember, this is a fuddy-duddy account. I'm not front-running you. It's just a reference point for me to tell me where I'm at in all of this. This is kind of like if you wanted to know what it sounds like when you hear or what it feels like when you hear yourself on the radio. I don't listen to my previous videos. I just kind of go, oh, what's this here? All right. And here's wheat. I'm wondering if we get up to the 40s. If we get up to the 40s, the 60s here, 440, 460, I think about doing some hedging here. But I'd kind of lean in a corrective pattern here. We did break out. They did have heavy shorts in the commitment of traders. Look at this. They're running into it, and ADX is turning up. This is a daily. So respect to the trend for now. 444, it looks like for right now on the upper end. So that kind of thing. All right. So there you have it. Have yourself a wonderful weekend. And there you have it. 420. Cute. Bye-bye.